We think Medallion is a compelling opportunity for investors who are looking for near-term gold production in Western Australia. We've crafted an absolutely clear pathway to becoming an 80,000 ounce per annum producer within the next 12 months. We're absolutely laser focused on getting to that first production milestone. And 2026 is going to be packed with positive news flow. I just encourage everyone to keep an eye on Medallion, take a closer look if you haven't done so already, and feel free to reach out and contact us. We're always happy to arrange a meeting and talk about what's unfolding at Ravensthorpe and now at Forrestania.
Welcome to today's webinar and Q&A with Medallion Metals. I'm Dannika Warburton from Investability, and I'm delighted to be joined today by Medallion's Managing Director, Paul Bennett.
Thanks, Dannika, and thanks also to everyone who's joined and decided to participate today. There's also a number of long-term shareholders that I know are on the call, and I want to acknowledge them. Your patience is really starting to bear some fruit, and I think you're really well placed as we move into 2026. 2 weeks ago, we announced that we completed the transaction with IGO. This is the culmination of management's plan to bring together the Ravensthorpe mineral resources together with the infrastructure at Forrestania and really lay the groundwork to build a new gold and copper producer in Western Australia. That asset combination, it's a growth engine. It's significantly de-risked. We believe the transition to production can take place within the next 12 months. The capital's modest at that circa $140 million level. It's efficient to get us to that 80,000 ounce per annum run rate as a first step. The margins are high. The business will generate gold for an all-in sustaining cost of $2,300 an ounce. The project will generate impressive returns on investment, a rapid payback. And then when we get that base case business model up and running, it creates a platform for future growth. So with gold processing capability up and running at Forrestania, a range of growth options open up to the business, both from within the ground that Medallion controls and then more generally from the third-party deposits that are within economic trucking distance of the processing plant. And the first evidence of that was the release that we made this morning about the historical drill holes at Lounge Lizard. There are plenty more where that came from, both from Lounge Lizard and other regional targets. This is a genuine near-term, high-grade gold production opportunity proximal to the plant and with outstanding infrastructure that we can leverage to get that asset into production very quickly. So unaudited cash at the end of January was $74 million. That's at the closure of the second tranche of the placement and the SPP. We have a credit-approved offer from Trafigura for a US $50 million project finance facility. We are more than well funded to build the mine and achieve our objectives in 2026. So with a funded pathway to 80,000 ounces per annum, multiple growth options, the market capitalisation of circa $320 million, it doesn't look onerous. The business is well run. It's attractively priced relative to its peers. We remain a compelling opportunity for investors looking for exposure to near-term gold and copper production in WA. And I think, one of the best analogies that I've heard recently is it's a mini Great Land. So on that note, Dannika, I'll turn it over to questions.
Thank you, Paul. That's brilliant. We've had lots of questions come through. If at any time you'd like to ask one, please use the Q&A feature down the bottom of the screen. So to start with, Paul, you did kind of mention this, and we've moved from the Ravensthorpe Gold Project now with the completion of the Forrestania transaction. How should investors think about Medallion today compared with 12 months ago?
Yeah, look, it's a good question. I think, previously Ravensthorpe was the flagship asset of the business, and it still is in many respects. It's a significant mineralised system. We're just scratching the surface of it. And I think the market recognises that, but there has been some caution about how we were going to commercialise that deposit, given the capital hurdle and the permitting timelines. Forrestania really solved for both of those concerns. And a year ago, we had an exclusivity agreement in place with the vendor. Today, we are the legal and the beneficial owner of that asset. So the deal risk gone. We've been handed the keys. It's up to us now to deliver. We've articulated that very clear plan to become an 80,000 ounce per annum producer. We've got the team, we've got the balance sheet to achieve that. I think really that's how investors should view the opportunity. What we've been able to talk about, or what we will be able to talk about, I think, in much more detail in coming weeks and months, is really the growth potential. And investors will hear a lot more about that from us, particularly as it relates to Forrestania and the gold potential there.
Mm-hmm. And we've received a question on the True Hub production platform. So the strategy now centres on integrating Ravensthorpe with the Forrestania processing infrastructure. Can you explain how this may evolve over time and how it may have the potential to lead to a step change in the production profile?
Yeah, so the strategy internally is very clear. Strategy formulated by our new management team and then endorsed by the board, and that's to get to an 80,000 ounce per annum run rate in 2027 and then double it within 4 years from the Ravensthorpe and the Forrestania region. So that implies that it's an organic growth pathway. That's not ruling out tenure consolidation from the immediate vicinity of Forrestania and Ravensthorpe, where there are clear synergies. But what we want to do really is to take this and make Forrestania self-sufficient in terms of ore sources, in terms of mill feed, and at that point then establish gold and copper production at Ravensthorpe, and then ultimately have 2 processing centres. So a lot of water to flow under the bridge until we get to that point, but the pathway is really there, subject to us hitting some important milestones along the way.
Okay, and in terms of capital efficiency with regard to the development, by securing the processing infrastructure, how does that change the development economics compared with building a standalone plant?
Yeah, well, that was the strategy shift that has had such a dramatic impact on the business. Was really, and that was securing access to Forrestania reduces time and money to first production. Now, the replacement value of Forrestania was estimated at $260 million for the purposes of our stamp duty assessment, and that doesn't include building the mine at Ravensthorpe. So contrast that with 140 million of capex estimated in the feasibility study, and the advantage of this approach is really quite clear. The other important factor is time. So by reducing the disturbance footprint at the Ravensthorpe end, what we did was really streamline our pathway through the regulatory framework relative to what we would have been faced with if we were building that standalone processing plant at Forrestania. So bringing Ravensthorpe and Forrestania together is all really about compressing time and money to get to first production.
Okay, and that naturally leads to the next question, which we received from Simon. He says, when we look at the Australian gold developer peer group, companies targeting similar production levels are often valued in the $600 million to $1 billion range. As Medallion advances the Forrestania Ravensthorpe strategy, what do you see as the key drivers for re-rating over the next 12 to 24 months?
Two key themes, I think, unlock that value over the year to come. The first is the progression of first production. The second of those is then the unveiling of the gold opportunity at Forrestania. So I think as the business makes that progression towards first gold, and then as we articulate what the opportunity is at Forrestania, the value of the company over time begins to reflect the value of the underlying assets and then the growth opportunities that extend beyond that.
Thank you. And Julian has asked, what are the key actions and milestones required before first production?
Well, building the mine at Ravensthorpe, that's critical path. And the only impediment to us getting going at Ravensthorpe is 2 state-based approvals. So amendment to our approval under the EP Act, which we already have, so seeking a minor amendment there, and then approval under the Mining Act. So we are targeting commencement of the excavation of the box cut in the second quarter of this year. It's probably late in the second quarter, but once we get going, it's then a year to steady state production. And Dan, I did notice that in the questions as they came through earlier, there was also something about what state is the Cosmic Boy processing plant in. Superficial work needs to be done on the existing infrastructure, and that represents between 10 to 20% of the $50 million that's budgeted for the capex on the processing. So the rest is on the modifications and the additions, which include building a new secondary ball mill, and then the installation of a gold leach plant there. So we expect the process element of the capex to be significantly well advanced come the end of 2026. So that then opens up the opportunity for us to perhaps treat our own material or third-party material that's in the region of Forrestania before we get up to steady state run rates at Ravensthorpe.
Mm-hmm. And we've got a question from Liam on the accommodation. So have you secured an extension on accommodation at Ravensthorpe, or will the workforce likely be housed in rental accommodation in Hopetown or Ravensthorpe?
We've got access to the camp in Ravensthorpe for 3 years. They have a strong preference to stay there long term. But if that isn't possible, then the alternatives really are all centered around alternative camp locations. So no rentals and alternate accommodation options within the existing towns are always options for us on an overflow basis. But our own camp is the preferred model.
Okay, great, thank you. And Chris has asked a question on sort of the district scale growth opportunity. He asks, Medallion now controls extensive tenure across both Ravensthorpe and Forrestania greenstone belts. How does this district scale footprint translate into exploration upside? And secondly, what are the key catalysts that investors should watch out for over the next 12 months?
Yeah, mining engineers answering these questions always dangerous, but
Give it a go.
Yeah, we have the dominant land holding now, both in the Forrestania and the Ravensthorpe regions. I think in both cases, I'd characterise the belts as mature but underexplored, particularly as it relates to gold. And there's various reasons for that, both for Forrestania and for Ravensthorpe. So these are large projects. They've got significant amounts of data and significant amounts of opportunity as well. So it takes time and balance sheet and technical capability to systematically work through these. And our focus is really on finding metal that we can commercialise quickly and get into the production profile. So the budgets for FY27 are still being worked on, but I think it's important we keep a certain portion of those budgets for the really conceptual and greenfields targets that I know the team is working on. So if we uncover something like another bounty at Forrestania, that changes the conversation dramatically. So we want to continue to provide our shareholders with exposure to those kind of opportunities.
You touched on just now about Forrestania exploration strategy. A question that came through from Andrew, to what extent can you, without revealing commercially sensitive information, can you outline Medallion's strategy for the gold exploration around Forrestania? And perhaps you can speak a bit more to today's announcement there.
Yeah, somewhat addressed in the last question, but the focus at Forrestania is really about finding another production source for Cosmic Boy. Now, Lounge Lizard this morning is indicative of what we think is the priority target, but there are stockpiles. There are other historical gold resources that we'll look to get into JORC compliance over the next few months. We will be drilling at Lounge Lizard. That's the first cab off the rank. It's principally QC for purposes, confirmatory validation purposes at the moment in the first instance, but we will also test extensions there along strike and down dip. So that's what we'll see over the next 2 to 3 months. And then we're continuing to work through our confirmed targets on the regional basis.
Mm-hmm. And Tim has just asked a bit of a follow-up question on the Lounge Lizard opportunity. Can you speak to how big the initial resource might be and would it displace Ravensthorpe ore, or does the mill need to be expanded?
You can chat GPT some of the historical resource estimates that it will tell you those. I'm not going to make a comment on them this morning because we've got some work to do there. Look, the deposit's drilled over 1 kilometre on 25-metre centres, denser in some areas, particularly around the old pits, and it's down to about 200 metres below surface. So there's a significant opportunity there. It has the potential to possibly beat some of the Ravensthorpe ore into the mill. But really, Ravensthorpe's the base case bedrock mill feed. And I think really Lounge Lizard provides the opportunity to augment that a bit. So it makes process plant go faster, go for a longer period of time, but then importantly, it's a second ore source, takes the reliance off Ravensthorpe, and I think it really de-risks the business in many respects.
Mm-hmm. Okay, well, you might be seeing that in a kind of called research note soon then, that answer. Tim has also asked just why we're on Lounge Lizard and providing the mineral resource estimate. It was noted that this would be in Q3. Can you confirm it was calendar year or financial year?
Calendar year.
Great. Okay, thank you for that. And moving on to a regional consolidation question that was emailed through by Chris. He asked, is the company currently considering further acquisitions in the Forrestania region that could potentially increase the resource base?
Yeah, look, I have got to treat this one with some caution as well. But this goes for Forrestania and it goes for Ravensthorpe. We are interested in any parts of the greenstone belts that we don't already control. So I'll just leave it at that.
Okay. Yep. Yeah. All right. And one from Peter, a bit of a geopolitical question. He said, if energy and oil prices were to rise significantly due to geopolitical factors, how sensitive would Medallion's operating costs be to those increases?
Cosmic Boy is on grid power, so shielded from short-term diesel and gas fluctuations in some respects, but longer term, always exposed to the energy price movements. Look, the basic cost structure of the business is that roughly 25% of those all-in sustaining costs are energy of one form or another. So it's that level of exposure.
Okay, thank you. And you touched on this in your opening comments about the board's capabilities, but with Medallion now being a multi-asset production build, could you go into a bit more detail about the board and the management team and, you know, their skill set for doing a dual hub transition to producer?
We've always understood that there was this opportunity to have multiple production sources when Forrestania came across. So what we've been doing over the last few months in terms of strengthening the board and senior management has always been with that in mind. We have introduced some really high caliber individuals to the board and the exec team. It is set as far as I'm concerned. The teams are being built out below those senior executives now, but that set of skills in the exec team at the board level is very well suited to where this business finds itself at the moment, and I think more importantly where we want to take it over the next 2 to 3 years.
Okay, thank you. And we're going pretty good on the timing, so I might answer a couple more of the questions that have come through in the Q&A. One from Nate, he's asked, while it is still obviously very early days, it would seem that Medallion wants to achieve a 10-year plus reserve for Cosmic Boy when Forrestania and Ravensthorpe are combined. Is that a true statement?
Yeah, absolutely. 10 years of reserves, I think that's fairly high bar to set for any mining company, particularly, you know, junior gold miner. But we'd want to have line of sight on that kind of production profile, and not all of that may be able to be converted to ore reserve, but you know, we're looking to extend the mine life. As I said before, make the mine go faster, make it go for longer, and give it longevity. And that's all from the regional assets that we control at the moment. There may be some tenement consolidation happen to assist us. It makes it easier with some of those other prospects that are around that we don't already have. But yeah, that's where we want to take this 10-year mine life at a minimum. And you know, I think certainly Ravensthorpe's open at depth along strike, and the more that we see at Forrestania, the more encouragement we have that there's some significant assets there that can feed the mill, make Forrestania self-sufficient in terms of ore sources.
It's exciting. Were you happy to take a couple more questions on Lounge Lizard, because there's been quite a few coming through?
Yeah, sure.
Okay. One from Andrew, he says, are you targeting just oxide gold at Lounge Lizard, or is the deeper fresh gold mineralization free milling?
Yeah, we're very ecumenical about what oxide profile it is. So oxide, transitional, and fresh. The mill can treat it. It's set up to do fresh, and we can introduce oxide as well. So if it extends at depth, that's a good thing as far as we're concerned.
Perfect, thank you. And Chris has asked, how quickly will further Lounge Lizard validation come through? Are the 300 plus drill holes of similar depth and quality? And it's a three-part question. Will you look to do a further drilling, or look to do an mineral resource estimate all on historical?
Good question, and there's a few parts to it. So the 65 drill holes released today, validated today, are a fair and balanced sample of the overall data set. So it's not biased in any way. I think there was some no significant intersections in the tables in the back of the report. So some of those holes, weren't above cutoff grade. So it was just that particular group of drilling that we're able to validate. So it's not, in my view, it's not a biased subset of the overall drilling database. The next step for us is QAQC drilling. So that should be relatively easy to permit on areas that are already cleared. So we will hit some of the areas of the deposit, confirm, twin some holes, improve the level of confidence in the historical data. And then I think we need to get an MRE out there as quickly as possible. So update to JORC compliance and then get it out in the market so the market understands the size of the prize. And then after that, we come in with the extensional drilling along strike and at depth. So that's kind of the sequence of events.
Okay, brilliant. Thank you. And one from Nate, he says he assumes that you've chosen Lounge Lizard because it would be the quickest to bring into production. But in recent announcement, there was also mention of stockpiles at Cosmic Boy and potential toll treating. Could you explain what next steps you have in place to progress this?
Yeah, so there's sampling and metallurgical test work underway on the stockpiles. Now, what the pathway to commercialise those stockpiles is up in the air at the moment. It's potentially material to commission the plant on. Alternatively, if we look to monetize them, perhaps we can get them through a third-party processing plant. So they're not immaterial in my view in terms of what they can do for the cash flow profile of the business. So we are working on that, but as soon as we have better visibility on the grade, the volume, and the met recoveries, we'll update the market with that.
Okay, thank you. Few more questions. One from Rob, it's more corporate focused. He's asked, is the Trafalgar facility secured against all of the assets at Medallion, not just the Forrestania plant? What is the estimated payback period for the facility, and is it likely to impede the proposed expansion of production?
The Trafalgar facility will be secured over all of the assets of the business. So it'll extend to Ravensthorpe and to Forrestania. So that's quite a fulsome security package there. The facility itself, it's got a 4-year term from the first advance date. So we have a 12-month grace period where there's no repayments due. It's accruing interest on the amounts that we've drawn down. And then the repayment profile is over 36 months. So 36 equal monthly repayments over that 3-year period. Run a spot scenario, and that repayment or the debt service obligations of the business are easily met, and that provides plenty of free cash flow to come out to the business and to undertake the growth that we want to undertake.
Excellent.
So
Thank you.
Yeah, no, not an impediment.
Perfect. Thanks. And we've got a sort of a broader strategy question from Manu, who's asked, please articulate the company's business focus and strategy so investors can form an investment view and track progress over the short and long term. So, Paul, can you summarise Medallion's growth strategy and what you believe are the key elements supporting the investment case today?
Yeah, I think I touched on it in one of the previous questions. So, and it's very straightforward. It's the board endorsed strategy, and that is to establish that 80,000 ounce per annum gold production business in 2027, and then double that rate within 4 years from within the district. So very clear. It's understood by everyone in the organisation. We're all orientated towards that, and so yeah, like it's simple, clear, and that's what we're aiming for.
Okay, and Paul, before we wrap up today, are there any final comments you wanted to leave investors with?
Just the usual summary, Dan. We think Medallion is a compelling opportunity for investors who are looking for near-term gold production opportunities in Western Australia. This is a sector of the market that's attracting capital and attention now. Good stories are being rewarded. Business is well run. It's attractively priced relative to its peers. We are very well funded to achieve our objectives in 2026. we've crafted a absolutely clear pathway to becoming an 80,000 ounce per annum producer within the next 12 months. We're absolutely laser focused on getting to that first production milestone. And as we make that transition, then the value of the company begins to reflect the underlying value of the assets and then the growth opportunities that we've got extending beyond there. So 2026 is going to be packed with positive news flow. The timing's really good. $8 gold prices at record levels, M&A starting to heat up in the sector. So I just encourage everyone to keep an eye on Medallion, take a closer look if you haven't done so already, and feel free to reach out and contact us. We're always happy to arrange a meeting and talk about what's unfolding at Ravensthorpe and now at Forrestania.
Thank you, Paul. It's a very exciting growth trajectory that you're on, and look forward to having another webinar and answering everybody's questions again. But thank you, Paul, and thank you to everyone who joined today's webinar. If you did have any other questions or we didn't get to yours, please do feel free to email us. We're more than happy, as Paul said, to answer any questions, and the details are on the bottom of the ASX announcements. That concludes today's webinar. So thank you again. Thanks, Paul.
Thanks, Dannika.